One bright spot yesterday was an intense rally on Wall Street during the president's declaration of a national emergency. Stocks finished up almost 2,000 points, the biggest one-day percentage gain since the 2008 financial crisis. And it came just a day after the biggest one-day loss since the 1987 Black Monday crash. Joining us to discuss the extreme volatility and what may lie ahead is Andy Serwer, editor-in-chief of Yahoo Finance. Andy, good morning.
Good morning.
You know, I mentioned stocks finish up, but there's so much volatility. It seemed to be just what the stock market needed was that speech by the president, but we're not out of the woods, are we?
No way. I mean, and listen, I'm trying to get a little relief here on Saturday because that was a crazy week for people who follow the markets. What a roller coaster. And I think that we have to expect more volatility in the days and weeks to come because of all this uncertainty. It's such an old saw, but it's true. Wall Street hates uncertainty, and this is uncertainty writ large.
Andy, Treasury Secretary Mnuchin said we're in the second inning right now of stimulus efforts. Talk about what effect you think those stimulus efforts can have and how long it takes.
Yeah, I mean, there are a lot of options that the government has right now, and I think they're going through them, and they're trying to see how effective some of the things that they've already done are, which are, say, interest rate cuts, and then also the measures that the president announced yesterday afternoon. But going forward, they can do things like cut payroll taxes, send checks directly to families, increase government spending, and backstop the private sector, and especially workers who get laid off. That's a real concern for us and for the economy because especially now that we have so many people working in the gig economy, they're not protected at all, and we really need to look at that very closely.
Yeah, to that point, as people are in crisis mode, they're wondering, what do we do? Do we look to our 401k, take out loans? I mean, what should folks be doing as these businesses are closed, are shuttering or shutting down operations? I mean, what should folks do?
Yeah, well, the thing about the 401k, of course, is so scary. And, you know, it's probably a good idea not to do too much at all as far as that is concerned, because you're going to be selling when the market's going down, which is just the wrong time. You really need to understand also what your options are and how protected you are in terms of a layoff or in terms of sick leave or medical leave. You need to really go through that with your HR department. If you're lucky enough to work at a big company, at a smaller company, talk to your boss, talk to your coworkers, try to understand how exposed you are, and then follow what's going on in terms of government action, because you may actually need relief from the government, be it the federal or the state or the local level.
And worth keeping it all in perspective too, Andy. I mean, so what the last 11 years, right? The market was at just over 6,000, the Dow, in 2009, went to almost 30,000 just a few weeks ago. Now it's back down to 23. Do you tell people to look at your 401k accounts right now?
Yeah, you just can't look at them. I mean, we always say just don't look. And at some point, you know, things will bounce back. I don't know if it's this year, next year, 3 years, 5 years, but, you know, it's the American economy, which is a pretty good bet over the long haul.
Andy Serwer, thank you for the insight.